This episode is brought to you by Paramount Plus. Paramount Plus has movies. So many movies. The movies you've seen 1,000 times and could watch 1,000 more. Iconic movies your friends can't believe you haven't seen. New movies, classic movies, new takes on classic movies. So whether you're into Top Gun or The Naked Gun, Mean Girls or Mission Impossible, Smurfs or Sonic the Hedgehog, there's a mountain of movies to discover on Paramount Plus. Start streaming today.
The views expressed on this podcast are those of the participants, not of Reuters News.
But I think we're going to have a very good relationship with China. And again, they will threaten us with rare earths. I don't think they're threatening us too much right now. But they could do that, but I threaten them with something I think is much more powerful, and that's tariffs.
Trade tensions are ratcheting up between the two largest economies. The US is squeezing sanctions and threatening 100% tariffs on China. Meanwhile, Beijing is culling its exports of rare earth materials. The problem for both economic giants is they're both mutually dependent on each other. The US has chips critical for AI, and China has the ingredients needed for industrial growth. Both sides are showcasing their leverage, playing a high-stakes game of chicken. But if neither swerve, the trade battle will have severe implications for the global economy. Is there anything the US can do to shift its reliance away from China? And how will this simmering situation play out? All of this and more is in this week's Views Room. It's Amy.
And it's Jonathan, and this is the Views Room, your weekly podcast that delves into the knottiest issues in corporate finance and economics. Amy, when you look at the statistics on kind of crucial supply chains, it's always the same story. You look at market share held by Chinese industry globally, and it's like 70% plus, 80% plus. You look at rare earths, you look at lithium mining and refining, you look at kind of like the general battery supply chain. So there is clearly a big strategic issue here, right? And one that I think Beijing has very smartly kind of tried to exercise some kind of power over as a means of signaling to the US and other states without kind of pushing everything quite over the edge. I don't know, is that your read of what's happening? Or?
I think so. I think that is absolutely it. And I think also there is the situation which, we kind of talk about, which is that basically they both have something the other one needs, right? So the US has these chips that like you need for these AI models, and that is, vitally important. But so neither one of them can really grow without the other. So given the complexity of this situation and the fact that we have an amazing team in both Asia and the US, let's bring in our guest. So we have Robin Mack, an associate editor in Asia, and Gabriel Rubin, who is based in the US, and both of whom have been writing quite a lot on this, whether it's rare earths or just the chip situation. So Gabe, Robin, you are very welcome.
Good to be here.
Thank you.
So Robin, can we start with a scene setter here? So can we just talk maybe just China here in terms of the rare earths? Because we've seen an awful lot, obviously, about the restrictions they're imposing, not just on the US, but more generally. How did they come to sort of control these ingredients, which, you've kind of written about how vital they are to everything from the automotive industry, to lots of industrials?
Yeah, so I think it's important to start by saying that China's dominance in rare earths is completely by design. So in the early 90s, Deng Xiaoping very famously proclaimed, the Middle East has oil, China has rare earths. And so over the next few decades, the government has really devoted a lot of resources to building up this industry that they saw was strategically important. And of course, in hindsight, they were absolutely right. And by the mid-2000s, a lot of Chinese companies basically just dominated the entire supply chain, from the mining to the processing to even the end-use applications like magnet manufacturing. And that's largely thanks to a lot of policy support, a lot of R&D funding, a lot of infrastructure build-out, subsidies, very permissive environmental regulations that really gave these companies a very significant edge over their rivals.
I was just going to say on the environmental issue, this is the key, isn't it? Because it's quite a dirty industry. And so it would be more difficult, I would have thought, for the US to do what China did.
Yeah, I mean, the environmental is for sure a big hurdle, but there's also other hurdles such as financial and even technological, just because you not only have to mine it, you have to process these rare earths. And that's a very specialized, technically complex, you know, process that a lot of companies just don't really have that expertise outside of China.
Right. And then the flip side of this, obviously, as Amy was saying earlier, is Chinese dependence on the US chip industry, right? Which is a little more complicated than just saying the US chip industry, since a lot of this stuff is fabricated elsewhere and whatnot. But Gabe, I was kind of wondering if you could give us the US point of view on how that side of the relationship looks, because to a first approximation, as Amy was saying, this is just a matter of two sides with two exclusive resources trying to negotiate out the terms of access to those, right? Or is that too simplistic a way of looking at it?
Well, I mean, I think in a large sense, it is that simple. It's these are two incredibly essential items or materials or inputs, let's say, in the global economy that you really can't function without. And both sides understand that these are major choke points in these trade negotiations. And how you've seen that play out, especially with the Chinese wanting access to American-made or sort of American-connected chips, is that when the U.S. Says that it will impose export restrictions on, for instance, the most advanced NVIDIA chips, that's when the Chinese go and threaten. Severe restrictions on rare earth exports, or vice versa, that can be the trigger. So they've stepped down from this before. Back in May, when these threats were flying, there was an agreement between Scott Bessent, the U.S. Treasury Secretary, and Chinese officials that they reached in Geneva and after some talks in London. And they essentially came to an agreement to keep these vital materials flowing. But anytime these trade talks break down, because these inputs are so necessary for these countries and they know that they can't live without them, you see what happened this past week, which is a blow up that leads to, an 100% tariff threat from the U.S. on Chinese imports.
And Robin, do you think that there is, in terms of the sort of tit for tat that we're seeing with this, does the market, like the kind of companies that would be mostly affected by these types of restrictions, how are investors sort of responding to this? Are they expecting this to be resolved, as in that there will be some sort of deal made between the two sides?
I think on some level there is expectation that there can be a deal, and we've already seen sort of you know Donald Trump softening some of his language when it comes to 100% tariffs and whether or not there will be a high level meeting with Xi Jinping. Um, but I think in terms of just the rare earths and the chips, I mean there's a lot happening. For starters, there is a huge AI boom, and I think investors are also quite happy to invest on that. And in some cases, it makes sense, right? Because for chip makers, for example, the AI demand has offset a lot of the trade and geopolitical uncertainty. In China, the strongest performing stocks are mostly AI related, and China and Hong Kong are probably one of the strongest performing stock markets globally this year. So it seems like there is a mixture of optimism for the trade talk and just a lot of AI fervor and hype as well. That's lifting stock prices up, especially in the region.
So, Robin, in your view, is there anything the US can really do at this point to kind of catch up in the rare earth supply chain?
Yes, absolutely. But I think it will be very difficult. In order to really just ease this reliance and break the Chinese grip on rare earths, I think the US will have to overcome three big hurdles. The first is the technological one, which I mentioned earlier about the processing capability and tech, and just really building the expertise and know how. The second is geological, just because there are some rare earths that are quite abundant, but there is a subset of rare earths called heavy rare earths that are almost exclusively found in China and Myanmar. And those are the ones that are very valuable and strategic because those go into your electric vehicle batteries, your fighter jet engines, your wind turbines, and those can't be substituted with the abundant rare earths. So the U.S. is spending a lot of money investing in trying to find new deposits, developing new mines. There's been some progress made in Australia. So recently we saw a big US Australia investment pact. So that is one big hurdle that will take a lot of time, is just looking for these heavy rare earth deposits and getting these mines up and running. And the third hurdle is financial, just because, rare earths, actually a very small industry if you think about it. Last year production was just 6.5 billion, which is just a fraction of other markets like iron ore or copper, for example. And in China, the entire industry has consolidated, and you have two massive state-owned enterprises that control all rare earths, from the mining to the processing to even magnet production. So these companies they have huge resources. They have government backing, they have deep pockets, and they're willing to accept very low margins. And that's something that Western miners and producers just can't really compete on, which is why we've seen a lot of governments kind of step up, come up with rare earth and critical mineral action plans, investment initiatives. And a lot of these involve the government coming in, setting a floor price for a lot of these critical minerals, just to incentivize these companies, because the markets are so volatile and it's just not a very high margin market.
And given, I guess, how long that process would take, right, what you're talking about, and how long China has actually been working on that, getting themselves to this point where they have these two like titans of rare earths. Gabe, what would a deal look like, do you think? And is there any kind of like outline of what the US might give on in order to get access to this market, which they do need at the moment?
I think there needs to be long-term predictability as to China's access to the U.S. market, as to China's ability to continue selling consumer goods in the United States. There are obviously lots of Chinese companies that lack access to U.S. markets due to a variety of reasons, economic sanctions, all the way to national security concerns. So there are a lot of access concerns when it comes to China's ability to compete in the U.S. And have access to the immense largest consumer market in the world. And obviously China does need, at least for the moment, U.S. advanced chips. So the continued flow of those chips is going to be important. But then, as with everything in the U.S.-China relationship, there are so many larger tensions at play between, the two largest world superpowers, everything from the future of Taiwan to control over, shipping lanes in the South China Sea. There are just so many different geopolitical issues and economic issues that are involved in these talks, that any single choke point can lead to either side going back to its trump cards, if you will, which are access to certain types of chips and access to these rare earth minerals, which each side knows that the other side really needs and really wants, and at least for the moment can't get elsewhere.
And I think to add to that, it's a really interesting dynamic because for China, not having access to the most cutting edge NVIDIA chips, or other chips, for the matter, is a long term problem, right? Because they don't want to fall behind in the AI race and risk their economy just being less competitive than the US. But for the US, the rare earth issue is a very immediate problem. If they don't have access to these critical minerals, they will not be able to make their cars and electronics and chips, and that could just result in billions, hundreds of billions of dollars of lost output overnight. So it's a really interesting dynamic from that perspective.
Interesting. So what you're describing there is basically like a kind of like short-termism versus long-termism mismatch. And we've seen the tone of Truth Social posts from Donald Trump get more and less belligerent over the last few weeks, right? About whether there will be a meeting with his counterpart in Beijing and whether there will be some kind of meaningful deal struck here. I mean, what do we think the consequences are for the world economy if this does just completely fall through and we get further escalation?
I think so for world trade, it will be quite bad. But I think it will just come down to who can make chips faster and who can develop their own rare earth supply chain faster. And until then, it will just be a matter of who can inflict more economic pain and who is more willing to accept more economic pain. From that perspective, I mean, I think it's very hard to say. Both sides are, the Chinese economy is not very strong. Growth is probably quite disappointing right now, domestic consumption as well. But the US as well has its vulnerabilities too.
Yeah, and I think one of the consequences will just be, as we've already seen, but it would continue, just an increase in the U.S. use of industrial policy and economic nationalism, just in terms of taking stakes in companies that are involved in this dispute, whether that is, taking a chunk of chip exports to China, a chunk of the revenue from chip exports to China, or that is taking a stake in mineral companies that are doing mining in the U.S. and elsewhere. So the U.S. is very eager to not fall behind in this race, and they're doing things that they don't usually do in their economic model to get there.
Well, we'll all be watching closely over the next few weeks. And Robin, I know you've got some very interesting views that you're going to be writing. I'm sure we'll see the same from Gabe. So thank you so much for your time.
Thank you.
Thanks for having us.
Thanks for tuning in. This podcast was produced by Cheryl Pena in New York and Gregory Garner in Toronto. You can listen to a new episode of The Viewsroom every Thursday on the Reuters app or your favorite platform. And don't forget to tune in to our sister podcast, The Big View, every Tuesday, as well as the other great podcasts from the Reuters team. If you like what you heard, please follow The Viewsroom and let us know what you thought. We have a new email address where you can send us feedback, which is breakingviews-podcasts@tr.com. And check out our views on the biggest stories in business and finance every day on breakingviews.com and reuters.com.